This is the Analysis in Chains with Nathan Williams and Neal Kieran.
Welcome to Analysis in Chains. I'm Nathan Williams, and joining me is Neal Kierans. Neal, how are you doing?
Hey Nathan, great to be back. Kind of tired, can't deny that. That's it's life as a newborn. But
how's the baby?
All's good. Everyone's doing well. Thank you.
Baby! You must be very happy, even though being very tired.
Oh yeah. All's good. I'd be even more happier if crypto was going up. Mm-hmm. But I guess you can't have it all. You can't have.
It's your baby's college fund, eh?
Yeah, that's it. I'm like, come on,
Looks like he's going to community college in the back streets of somewhere, unless things turn around.
Exactly. I'm
a bit of a bear market.
Exactly. Yeah, I can't wait for the first crypto university to appear in the ICO, and that's it. All the funds are going into that.
Ooh, crypto university. I like that idea.
So,
that was an awkward pause.
Yeah, I was like,
I set myself up for a follow-up, and I was like, no, I got nothing. And then I was like, well, Neal's going to pick it up. No.
Yeah, I kind of sensed you're going to say something, and I just paused. But yeah, so crypto hasn't been doing well since we last spoke. I think we did touch on some of the reasons why. I know in the podcast that you recorded without me, you briefly discussed some of our conversations, but I've dug in a bit more to try and understand what's happening, and I think I have a good idea of what's really happening, and it doesn't seem to be covered by anyone at all.
Well, so yeah, I mean, I always find this really interesting because I want to know what's going on, and I don't really, know. So tell me, Neal, what is it?
So, first of all, the big assumption that we keep hearing is regulatory pressure. In other words, people are anxious because new regulations are being drawn up and the likes. We also have to remember, we had the South Korea ICO banned, and then you had China really clamped down on Bitcoin and mining and the likes. So yeah, all of those really can create a lot of pressure, and therefore the price really did, come down substantially. In the last few months, we saw Bitcoin touch off roughly 6,600, 500, whatever, and then jump back up. But we're at the sustained low of approximately 6,400 for Bitcoin. And I use Bitcoin as a reference because it seems to be the same pattern for nearly all crypto out there. But so it's a bit too easy of an assumption to just blame regulation, I feel. And I feel the real issue is in relation to mining. Now, Tom Lee's analysis in the past stated that we're right now at approximately the price, the cost of mining. So what we see here is that, okay, when you're very close to the cost of anything as a commodity, if generally if the costs get too high, people would shut off production. So if we think of oil as an example, when oil price drops too low, and we saw this recently, a lot of oiling rigs were closed in the USA and other parts of the world. Which is natural in any commodity-driven market. Now, in terms of Bitcoin, we have to assume the same, is that when the price gets so low, it just doesn't make sense to mine below cost because you're just losing so much money. But that doesn't seem to be the case. That's the big assumption at the moment. But what we're seeing is that the hash rate is still climbing. There's still a lot of investment being made into mining. People see Bitcoin as the new gold rush, and they're all just trying to get a piece of the action. Because there's this big assumption now, okay, Bitcoin's going to go to 25K by the end of the year, it's going to be 50K the following year. Because of these assumptions, that means miners are mining even if they're losing money. So it means that because they don't want to lose whatever Bitcoin that they're entitled to from their contribution towards mining. So this is continuing the pressure because what's happening is that you have a lot of miners who are losing money, who are, some are maybe able to hold on to their Bitcoin despite its drop in price and maybe have some reserves to pay for power consumption. But there is going to be a lot of miners out there who are just dumping their Bitcoin just to stay afloat. Because when you have so many, like we'll call them institutional miners now, because they have big warehouses, there's a lot more of these guys popping up here in Quebec and all over the world, and you can see their videos on YouTube. There's so many of them now that it's very, very hard. It's very, very competitive. And if everyone is getting into the game and there's only so many coins being made per minute, then that means you get a less slice of the action, which means you get less money. And when the price is this low, everyone is losing. So what we need to see happen is we actually need to see the hash rate plateau or drop off. And that is actually what we've started to see happen with GPU mining. So with Zcash, Zencash, Monero, and this is very evident after their forks because of the ASIC mining rigs. We've seen that their GPU hash rates have dropped down because of price, which is, in my view, makes those cryptocurrencies more attractive to buy now, knowing that there's some correction happening there. But any coin out there that has ASIC mining, any ASIC miner that you can buy off the shelf, all of their hash rates are still increasing, and that is just going to keep price pressure going unless it changes course.
Of course. I mean, it totally makes sense when you say it that way, because the thing about ASICs is that they are specialized machines designed to game the system that people buy in order to game the system, right? They're specialized pieces of hardware for solving proof of work. And the the thing is that if Bitcoin becomes unprofitable, it's fairly easy to switch over to mining Litecoin, mining Dash, or just saying, okay, I'm not mining right now because it's not worth the electricity. And so people see them as a fairly stable investment that they can just drop some money in, set up a farm, and then they'll get Bitcoin, and they figure, well, even if the price goes down, I'm still earning piles of Bitcoins, and the price will go up eventually. But this oversupply ends up pushing down things for everybody.
Yeah, and it really is a classic demand versus supply issue. And I've been quoting Tom Lee's analysis for a while now, and his big assumption was Bitcoin go to 20,000, and a lot of that is driven by the hypothesis that the millennials see Bitcoin as gold 2.0, or digital gold, for example, and he says that they're going to be buying into digital assets the same way the golden generation bought into gold in the 50s and 60s. And he says it's just a big generational trend towards what they see as a viable investment, because there's a lot of trust lost in, say, stock markets and the likes. But the thing is that while that hypothesis does make a lot of sense to me, the issue is that while demand may be increasing, it's just that the supply is increasing even quicker. And so we long term, all of this will play out, I think, more positively for crypto. But at the moment, because of this sort of minor wars that's happening, it really is suppressing the price. And the last time we saw something like this happen was, I believe it was 2013, when it first got to, I believe it was $1,000. It was nearly the exact same curve in terms of price appreciation in a very short period of time. And then over the period of, I think it was 2 years, it took 2 years to go back to that high of $1,000. So we seem to be following near the exact same price depreciation curve at the moment. And a lot of what would have happened back then is happening again. It's just that everyone started getting into mining then, because hey, this thing is actually serious. This actually has potential, because everyone would have heard about Bitcoin in the news, and we've gotten the hype. And then it seems to be every wave of Bitcoin news there's more enthusiasts getting into the game. So
it's a human behavior thing, isn't it, Neal? Like we love to look at these patterns and trends, but I mean, one of the one of the problems is that human behavior is not always logical, and or at least not in terms of the behaviors and trends. And the thing is, buying Bitcoin is not an easy process. Still, it is a complicated process, and if you have to go through a learning curve to buy Bitcoin, it's not that much more of a learning curve to get a miner and mine Bitcoin. And so a lot of people, I think, have just wanted to not miss out on the chance to be involved with mining itself. Like, I know a few people who bought like ant miners or whatever, left them running uh, in their dorm or wherever wherever they're at, and in order to participate. And that also gives them coins. But if we're running on the assumption that, well, more and more people want to buy digital assets, it has a different effect if people are buying into digital assets by buying a miner and trying to mine them versus by just buying them outright and hodling until they go up in price.
Yeah, I think that's a very, very good point. It's a different approach, and I think it's one people thought was maybe the better way, given that the price is going to start dropping. Hey, why not mine? And I would say, like, I was thinking the exact same thing. I was like, hey, well, I should just buy Antminer, or get a few GPUs and mine a cryptocurrency that's more suited to GPU. But the thing is that when everyone thinks the exact same way, generally it can, the gains become less. It would be it if you're all buying the same stock. There is a point that there's less people to buy it, and in the case of mining, when everyone's mining the same thing, that means no one's buying it, and that means the price is going to drop, and therefore you're all trying to scramble for these very, very few Bitcoins are made every so often. So I think
like this, if you have the choice of buying a highly risky investment and putting out your cold hard money, a couple $1,000 to buy some electronic coins, or you can put out the same amount of money for computer hardware that you can hold that will generate the coins for you for free, theoretically, in exchange for electricity. Which one sounds like the better deal? Well, if Bitcoin crashes, I still have the computer. And right? So it's this human bias of that plays into it.
I agree with you with the computer aspect. If you're a GPU mining, and it's I've taken a lot of interest in that since the whole bubble. But yeah, if you're getting into ASIC mining, the problem with it is that everyone is doing the same thing. Everyone is buying an ASIC miner. Everyone is, as you say,
you can use it for anything else.
Yeah, they're like, hey, I'm just going to buy this and leave it running in the background and make Bitcoin. But when everyone's doing it, then there's less of a gain, and then that technology is wasted. So this is the sort of tricky part of ASIC mining and where it's going, is that if you are just going to buy an ASIC miner just for your own fun, well, you're not going to gain much, because they keep on upping the technology of ASICs. So in a year's time, your miner it won't be very effective, and you're going to be forced to buy another one just to keep up with everyone else. Then you have all these institution miners who are all plowing millions of dollars into buying ASIC miners from various companies. So you're competing against those, and because it's just become this huge competitive war, I'm inclined to think, why bother competing? And the counter to that is buy the dip. It's like, okay, well, if all of these guys are really suppressing the price, now is the time to buy, which I have been doing, because I would struggle to see the price fall further for Bitcoin itself and many other crypto. And so I'm now taking the approach, well, if everyone's mining, I might as well be buying. So, it's always important to sort of be a contrarian when these things start to happen. I know it can be hard, and you can have a lot of doubt in yourself when you see Bitcoin's dropping and you're thinking it's going to go to zero. Well, you need to have faith in the bigger picture in terms of the community and everything else that's evolving around crypto at the moment, that there's so much investment happening. I feel, and this isn't financial advice, this is my own personal perspective, is that struggle to think it will go all the way down to like $1,000 in the next 2 months. So that's what I see now as a good chance to buy any form of crypto.
It's sort of funny, how we've sort of come full circle. And I remember at the beginning of this podcast, I was the bullish one and you were the skeptical one. Now I'm going, and you're like, ooh, take my money.
Well, I guess when it comes to investing, it's important to be a contrarian. In other words, when trends are going one way, you have to ask yourself, why is it? And does it make sense? So when Bitcoin was taking off a year ago, there didn't seem to be much reasoning behind it. And I was doing a lot of research to try and understand why that was. And I think it seemed to be that the ICO boom just brought so much attention to crypto when people heard about Ethereum and how people had like 1,000% in a week, that it got people back into it, and therefore they started going to all of these exchanges like Coinbase and the likes. And they were soon, as you go on Coinbase and a lot of the major exchanges that exchange fiat for crypto, the first one you see is Bitcoin. So I'm sure a lot of people were just buying the first thing they were seeing, buying a bit of Ethereum as well, and then it kind of just became this momentum for Bitcoin that just kept going, and it was breaking more record prices, and that's what happens if every report is Bitcoin breaks another record price. It just fuels the news and fuels people's anxiety of missing out on this big opportunity. So that's why I was like, whoa, this is getting out of hand. Whereas now, it's every day is Bitcoin is hitting its low point again, and it's doing terrible. It's one of the worst performing assets of this year, and now I'm like, hey, this is an awesome time to buy.
All right. Well, Neal, we've got a couple of events coming up this week for any of our listeners who want to join us. In San Francisco, there is going to be a meetup on the 21st at the Metis. And in Berlin, there is a meetup on the 21st as well at Berlin Impact Hub. So we'll have the links to those in the notes, and hopefully we'll see a lot of people come out and join us. It was good to have you back, and good luck with the baby.
Thanks, Nathan. Hopefully we'll have a few podcasts here and there over the next few weeks.
As long as I can catch you between feeding times, eh?
Yeah.
Okay, have a good one.